What's up everybody, Nate here, and a few weeks ago I made a video going over everything about China's economy and its real estate collapse. The Chinese economy is basically going through a period like the United States saw during the Great Recession and housing market crash of 2008, except for this time it's going to be a whole lot worse. In response to this, the Chinese government has talked about stimulus programs and bailing out a lot of these real estate investment firms that have made mistakes with their sales over the last couple of years. Now, this has disastrous effects for not only the Chinese economy, but of course for the entire rest of the world. And today I want to go over how all of this is going to affect the global economy and why China's collapse is near imminent. Now, the first thing you need to understand about China is its economy has exploded over the last 30 years, and that is largely due to the United States and businesses all throughout the world. China has been working closely with the United States by taking a lot of US debt, using a lot of those US dollars to bring prosperity to their own country, and creating a lot more manufacturing opportunities for our goods and services to meet demand here at home. Not only that, but China was seen as an emerging market, and that means that investors have been pouring money into real estate and Chinese companies over the last 30 years. This has meant that China has exploded in growth and has now grown faster than pretty much any other country on the planet in terms of GDP. So all of this money is now circulating throughout China, and that really boosted up its economy and it boosted up its workforce. A lot of Chinese citizens now have a lot of wealth. So what ultimately happened is Chinese citizens, well, they were starting to grow their families and they were growing their wealth, so they needed a place to live, and Chinese real estate companies were born. These Chinese real estate companies started to create homes for everyone in the country, and that makes a lot of sense considering China has a huge population, over 1 billion people compared to the 330 million people here in the United States. But the way that these Chinese real estate companies went into their deals was kind of backwards, because when a citizen entered into a deal, they essentially put money up front on a property that for the most part wasn't built yet. The Chinese companies and real estate firms eventually took all of this money to fund other types of projects. So they were relying solely on debt, and that meant that if people didn't pay up front for their mortgages, then all of these other properties that these real estate companies had bought, well, they couldn't be finished. And now that's exactly what we're facing in China. Chinese citizens are basically fed up because they paid for a property, they're paying a mortgage, and that property is not being built. This is a systemic problem all throughout China, and it's causing massive failures in the entire financial industry. Not only does this mean that people are not going to have a place to live, it's going to mean that banks and real estate companies go out of business. But this is a bigger issue than that, because Chinese GDP is really intrinsically linked to real estate in the country. Around 29% of the GDP is linked to real estate and these mortgages. So if people don't pay them, all of that money essentially disappears. Not only that, but these real estate companies are not making as many sales anymore, because this really hurt expectations. A lot of people are looking at the mortgage market and they're saying, I don't want to get a mortgage because these companies are not going to finish my property. I'm going to just be wasting away all of my cash. So they're not buying any new homes. That is a big problem for the entire Chinese government, because a lot of governments throughout the entire world, including the United States, use these property taxes to fund schools and other programs in cities and the country. But without these sales happening and without people actually paying their mortgages, now all of these cities and programs are losing billions of dollars in tax revenue. Now, the Chinese government has come out and said that they're going to help bail out a lot of these real estate firms that have made all of these bad deals. Now, a few months ago, and actually in 2021, we covered a company called Evergrande. The Evergrande crisis was huge in China because this was basically the first tipping point of this economic collapse. Evergrande basically bought way too many projects and had way too much property that they could pay for. They went into default, but then the news kind of ended from there. If you paid attention to the story though, well, a lot of individuals and governments around China actually ended up picking up the tab for Evergrande's failure. Evergrande basically looked at a lot of individual citizens of China and said, you want to buy a home. Buying a home is really important, and the value of a home is always going to go up, so it's an investment for the future. That kind of sounds familiar, doesn't it? That is exactly what happened with the real estate crash of 2008 here in the US. We had real estate companies and banks basically telling Americans that, yeah, homes were the American dream and you should get a home. The value of homes are always going to go up because demand is always higher than supply. But what we found out is a lot of these banks were just giving out mortgage loans to anybody and everyone that wanted one. People ended up not being able to pay their loans though, and that crashed the entire financial system because now Wall Street went down because of mortgage-backed securities, the banks went down, and nobody had any money, and there's a big fallout from that with inflation because of quantitative easing, and credit histories also tanked because of millions of foreclosures. That put Americans in a really bad spot going forward, and it basically caused the Great Recession as we know it. But this might be even worse in China. The Chinese government is trying to get people to buy homes right now so that way they don't have a lot of that economic fallout, and they're printing a whole bunch of money in order to do it. Not only that, they're bailing out these real estate companies and they're lowering their interest rates so that way there's a little bit more incentive for people to get homes. But this really isn't going to help in the long term because the people of China do not trust the real estate companies. That means even if you lower interest rates and print money, people are still not going to buy homes until you kind of fix the systemic problems of what happened before. Well, you're still going to have issues. Aside from China's real estate problems, there's also some other massive things going on that is going to drastically hurt its economy in 2022. Right now, China has extreme heat and droughts, meaning that the entire Chinese economy is relying more heavily on energy, but the costs are going up. Meanwhile, Chinese citizens are not really able to recoup the cost because inflation is also starting to rise. The cost of goods and services in China is going up because gas prices are going up, energy prices are going up in general, and because of the pandemic, we've had lockdowns in factories and a lot of other businesses, meaning that things are just not getting made as quickly, but they have a huge demand for everything, and what that's causing is demand to ultimately go down. Just like here in the United States with our own inflation problems, their CPI index or consumer price index is also going up, meaning they need a whole lot more money in order to buy all of the same things, and that's a problem considering they have all of these other issues. With demand for just about everything going down in China, that could mean two things for the United States. One, because China uses a lot of gas, around 15% of the world's oil, that means that gas prices here at home could actually go down because China doesn't need as much of it because their people aren't buying as much as they did before. Prices here at home could go down, and the same thing could happen with all other goods and services because China just isn't consuming as much as they were before because prices are out of control. In addition, China over the last decade or so has loaned out around $1 trillion to other foreign governments like Sri Lanka. However, a lot of these governments, Sri Lanka included, are starting to default on all of their debts, meaning they can no longer pay them. That means that China is about to lose $1 trillion. Of course, that is all on top of printing more money, bailing out all of these companies, and losing a lot of tax revenue from its citizens. And while China does not have the reserve currency in the world, that is of course the US dollar, well, they're still the second largest economy in the world, and people are trading money there, and people have Chinese money all throughout the entire world. But as inflation goes up, as their currency becomes even less valuable because the country keeps printing more, they keep propping themselves up, well, and that's going to mean people trade out of those assets. They're going to want other things that are a lot more valuable. And just like with the Evergrande situation, they basically got bailed out by the government. But what's happening now is people are still refusing to pay their mortgages. Evergrande kind of convinced people to buy a home, maybe even a second home, but now they're not paying at all because they don't trust the companies and they don't trust the banks. And to top it all off, 5 state-owned companies from China are about to be completely removed from the New York Stock Exchange. They were audited and they're not meeting up with the United States standards, which means we could end up losing trillions of dollars in market cap value here in the United States. That's going to hurt investors' pockets the most. Basically, these 5 state-owned companies of China are not allowing US regulators to look at their finances to kind of audit them to figure out how they're making profits and how they're spending their money. Instead, they would prefer that Chinese companies do that, but that's against United States law. So the clock is literally ticking. If they don't comply with US regulations soon, they are going to be delisted from the New York Stock Exchange. And that means even less money flowing into the Chinese economy, and it means that there's fear and doubt over the legitimacy of these brands. So in a nutshell, China is basically holding on for dear life right now. They're lowering interest rates to kind of incentivize borrowing and to incentivize people to get out and buy a home. They're also starting to pour billions of dollars back into the economy to, well, again, incentivize people to go out and spend, but they're not really fixing the root cause of a lot of these issues, the real estate companies and the financial system. In addition, a lot of the systems that the Chinese government has operated on and a lot of the debt structure that it has, well, that is starting to fail too, because outside governments are no longer able to pay their debts. And because the real estate market in China is so massive, around 29% of the entire GDP, this could ultimately mean a Great Recession style crash, but in China. But now I want to hear from you on this issue. What do you think about China's impending economic collapse? Do you think that the government and Chinese citizens are eventually going to get themselves out of this, or do you think a full-blown crisis is on the way? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.